Heya, cryptozens. Tonight's stories are: Senate banking head hated the Super Bowl crypto ads. Coinbase, BlockFi and Kraken team up to solve anti-money laundering reporting. The date is February 16th, 2022, and welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for the podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. We bring you new stories on familiar topics. Keep in mind, nothing in this show should ever be considered financial advice. If you're new here and you find that you're liking this show, subscribe and rate us. If you're on Spotify, you can rate right from the app. So give Tex and I 5 stars. It'll help other people find their way to our podcast. There's a lot to talk about. The U.S. Senate Banking Committee Chief Sherrod found himself a bit upset at the quality and information provided in these Super Bowl cryptocurrency ads. It's his contention that there just wasn't enough information to protect the public. We're going to take a look at that. Also, 18 crypto firms are banding together to take on the difficulties of the travel rule reporting requirements, all on tonight's show. Now, before we jump into these stories, let's take a quick look at the markets. The global crypto market cap is $2.0 trillion. That's up 0.02% on the day, so pretty much just dead even from yesterday. At the time of writing, the top 5 cryptos by market cap are Bitcoin up 0.07%, Ethereum down 0.34%, Tether, Binance coin down 0.57%, and USDC. The top 5 NFT collections by 24-hour volume on OpenSea are Tasty Bones XYZ up 282%, G-Rilla Official, even on the day. I'd looked, it is the first day, so. Azuki down 50.29%, Eden Horde up 124%, and Bored Apes down 11.55%. Now, keep in mind, some of these collections have very volatile prices, so do your own research. Senate banking head hated the Super Bowl crypto ads. Did you like the Super Bowl? Did you have a good time watching it? How about the ads? I know crypto Twitter was mostly more talking about the ads than the game. And while there were certainly exceptions, I think most people felt like they were okay. Mostly speaking, they were all right. The U.S. Senate Banking Committee Chief Sherrod did not like them. He was not impressed at all, and he put the ad makers on blast for not including what Senator Brown felt to be the appropriate warnings and risks involved. Senator Brown took the opportunity during the Tuesday Senate hearing on stablecoins to bring up the topic of crypto advertisements, and specifically the ones during the Super Bowl. He feels most of the ads failed to tell people about the potential risks and downsides to investing in crypto. They didn't talk about the wild price springs and the rampant scams. They didn't bring up the fact that they're not as regulated as traditional assets in their markets. Everybody knows these Super Bowl ads are not cheap. They are popular though, and that's why companies like Coinbase and FTX shelled out almost $20 million for a 30-second ad slot. Coinbase's ad, which featured a floating QR code, prompted a wave of traffic that briefly caused the crypto platform's website to crash. The senator took the crypto companies to task. He claimed that they were just trying to make a buck and just trying to get as many Americans as possible to start investing in crypto. He tried making the point that if crypto is money, and many people would tell you that it is, why do they need an ad blitz? He said, quote, "I don't think I've ever seen, in 40 years of Super Bowl watching, the Federal Reserve buy a multi-million-dollar commercial for the U.S. dollars. That's because crypto isn't money, it's designed for speculation." He added, "The ads left out a few things. They didn't mention the fraud, scams, and outright theft. The ads didn't point out that you can lose big in crypto's huge price swings. They didn't tell you about the high fees pocketed by the crypto companies." Now, crypto Twitter being crypto Twitter, they did not take that lightly. One Twitter user posted, "As if fiat currencies never have issue with transparency, use legality, being untraceable, used worldwide in criminal ways, and the like. Fear, uncertainty, doubt rules the day for some." And they didn't seem to think Senator Brown was sufficiently educated on the subject. They wrote, "Sounds like Senator Sherrod Brown needs a crypto education. Brian Brooks, time to make another house call." This was during the same Senate hearing we were talking about last night. Senator Brown took time to rail against stablecoins. He claimed that they endanger the economy and are too risky for the hard-earned money of Americans. The Biden administration has called for further analysis and potential regulation of stablecoins. Earlier this year, Bank of America said that they felt government's issuance of a central bank digital coin was, quote, inevitable. Coinbase, BlockFi, and Kraken team up to solve anti-money laundering reporting. A group of 18 crypto companies have announced the launch of something called Trust. That's an acronym for Travel Rule Universal Solution Technology. Okay, so what is the travel rule and why is it important? The travel rule requires financial institutions to send certain basic information about their customers when sending funds over a certain amount to another financial institution. Custodial cryptocurrency exchanges, like other financial institutions, have to satisfy this rule, which was written before crypto even existed. Now, this announcement that was posted by Coinbase, Paxos, and others came Wednesday, and details of how Trust is going to make it so cryptocurrency exchanges can securely send the information that's legally required by the Financial Action Task Force. It creates a comprehensive compliance network that's designed to address money laundering and terrorist financing concerns, all the while protecting the security and privacy of your personal information. The companies included in the Trust announcement were crypto exchanges Coinbase, Gemini, Kraken, and Bittrex, as well as other crypto custody companies like Anchorage, Avanti, and Zodia Custody. And see, the way it's set up now, all virtual asset service providers are required to transmit specific customer detail between counterparties for transactions over a specific threshold. What Trust is going to do is let those 18 companies better comply with the rule as well as respecting their customers' expectations of privacy. The plan is to help companies comply with the Financial Action Task Force Money Laundering Travel Rule. They're not setting up a central store of your private data. What they will do is encrypt the data and send it through end-to-end encrypted channels. On top of that, the exchange is going to have to prove that they are owner of a certain crypto address before customer information is sent to them. So they're going to check the exchange's credentials before handing your data over. This helps ensure that the right information is sent to the right exchange, hopefully bolstering the system's security. Their plan is to add new members. This will help ensure that they can provide comprehensive compliance coverage across the crypto industry. Elena Hughes is Gemini's chief compliance officer, and she said, quote, "There are two components to the solution. There's the ability to identify who's on the other side of the transfer prior to initiating it. Secondly, there's no centralized storage of personal data. So we won't send it via a centralized repository. Instead, the information is exchanged on a bilateral basis." Now, compliance with the FATF travel rule is important for anyone who wants to service customers across the U.S.'s borders. That said, this isn't the only way to ensure compliance. Now, Binance and FTX, you'll notice they're not on this list. At present, there's no indication whether they're going to sign up or not, but they don't have to be compliant. According to Hughes, the plan is to expand there to other global jurisdictions. Currently, that's happening in Canada, Singapore, and Germany. Now, the goal is also to become an industry standard for complying with the travel rule. As I mentioned, there's more than one way to do it. At present, the crypto industry only recognizes one standard, that of the Inter-VASP messaging standard, also known as IVMS 101. Last October, Tether announced their plans. They announced that they were going to integrate Nada Bean's travel rule solution. And as the industry grows, it's going to be more important to make sure that these companies are in compliance. International anti-money laundering regulations are likely to become even more important. Now, if you go to Coinbase's website, you can go to their blog. They have an announcement directly there explaining what their intentions are. That's going to do it for us tonight. What do you think? Did we get it right? Reach out and let us know. Send us an email at crypto.overnighter@gmail.com. That's crypto.overnighter@gmail.com. You can also find us on Twitter and Twitter. Links to those platforms will be in the show notes. And please, if you could, like, subscribe, share, and comment and review the podcast. Also, if you're listening on Spotify, they included a feature where you can rate a podcast directly from the app. So, give us a 5-star rating. It would really help Tex and I out, and would also help other people find this content. Getting that word out there helps them and us. And with that, may all your investments go up and to the right.